Hey traders, in today's video I'm going to be showing you one of the best moving average crossover strategies specifically designed for the 5 minutes chart. If you're looking to make quick, precise trades, you don't want to miss this. So stick around and make sure to hit that subscribe button if you haven't already. Let's dive in. Alright, before we get into the crossover strategy itself, let's quickly go over what moving averages are. I'm just going to be starting with loading the moving average to the chart. Okay, so the moving averages are one of the most popular tools used by traders to identify trends and momentum. In this strategy, we'll be using two types of exponential moving averages or EMAs, the 9 EMA and the 20 EMA. Now, the EMA places more weight on recent price data, which makes it faster and more responsive to price changes compared to the simple moving average or the SMA. This is perfect for short-term traders like us who need quick gains, right? So I'm just going to be loading both the 9 EMA and the 20 EMA. I already loaded the 20 EMA to the chart, so I'm just going to load the 9 EMA now to the chart. Okay, all right, here we go. So we have the 9 EMA and the 20 EMA loaded to the chart. So here's how you set up this strategy on your 5-minute chart. You'll need to add the 9 EMA like we already did and the 20 EMA to your chart. Once you've done that, it's time to watch for crossovers. When the 9 EMA when the 9 EMA crosses above the 20 EMA, that's your signal to go long. This indicates that upward momentum is building. On the flip side, when the 9 EMA crosses below the 20 EMA, it's time to consider a short position as it signals downward momentum. Okay, now let's talk about when to enter and exit trades. A lot of traders like to enter the trade as soon as the crossover happens. However, I recommend waiting for confirmation with the next candlestick to avoid false signals. You don't want to rush in and get caught in a fake out. Okay, so for exits, you can use the same EMAs to the side. If you've entered a long trade, for example, and see the 9 EMA crossing back below, if you've entered a long trade, for example, and then you see the 9 EMA crossing back below the 20 EMA, that's your signal to get out. And the same applies for short trades when the 9 EMA crosses back above the 20 EMA. Okay, that's it for the buy and sell signals. Okay, now in terms of risk management is key to making this strategy work for you. Since you are trading on a 5-minute chart, moves can be fast, so you want to manage your risk carefully. I recommend never risking more than 1 to 2% of your trading account per trade. You can also place stop loss orders right below the previous swing low for long trades. For example, when you enter a long trade, you can place your stop loss just below the previous swing low. Okay, then for sell trades, you can place your stop loss just right above the previous swing high to protect yourself from sudden reversals. Okay, now to recap, the 9 EMA crossing above the 20 EMA is a signal to go long, and when it crosses below, it's time to go short or exit your buy trade. Now, when you enter a short trade, when the 9 EMA crosses above the 20 EMA, it's time to exit your sell trade. This strategy works great on the 5-minute chart, especially when you combine it with solid risk management and confirmation signals. Remember, no strategy works 100% of the time, So always keep an eye on other factors like support and resistance levels. It's all about stacking the odds in your favor. If you found this video insightful, make sure to give it a thumbs up and subscribe for more trading tips and strategies. Drop a comment below if you have any questions or if there's another topic you want me to cover next. Thanks for watching, and I'll see you in the next one.